Hey guys, and welcome back to another video. In today's video, we're going to be discussing what I think could be one of the best alternatives to Treasury bills, something that we talk about a lot on this channel and that are super great, but this is another option that could be out there for those of you that might want a little bit more flexibility and to have access to your money at any time. Now, the whole basis of this is the idea of making your money do work for you. We know that savings accounts are not the way to go. According to this article, you can see that the national interest rate on a savings account is only 0.47% per year. This is virtually nothing, and it means that any money that you have in savings account is not going to really be increasing. One place that we've talked about to park your money a lot is Treasury bills, like I said, but another great option is money market funds. Now today we're going to be talking about Schwab money market funds particularly, but this is something that exists across all investing platforms. Now in general, a money market fund is something that invests in short-term high quality securities, and it aims to basically give you a higher gain than other cash products might, while also providing the stability that comes with lower risk investments, meaning that the rates on these are going to be a lot more secure than investing in actual individual stocks or something else of that sort, but the actual return is obviously going to be a little bit lower. We know that higher risk is always higher reward, and so with a little bit lower risk, we're going to be bringing in lower reward. Particularly, the fund that I choose to invest in with Schwab is SWVXX, the Schwab Value Advantage Money Fund, and you can see that the yield on this is about 5.17% per year at this current time. Now, this isn't the exact yield, and we'll talk about that in just a second, but it's pretty close, and you can see that that is a mighty amount of money to be returning from a mutual fund. When we go ahead and compare this to our T-bills, it's going to be a little bit lower. You can see, for example, even with the 4-week T-bill, it's paying out 5.36% right now, which is a super good rate. But obviously the advantage to this is the fact that you can take it out whenever you want, particularly if you put it in a Roth IRA. And that is exactly what I've gone ahead and done in my personal investing account. Now at this point in time, this particular account is not exactly the model of what I'm looking to do in the future. I'm sort of in a transition phase, trying to switch over some of my assets from what I've been investing in the past to what I wish to invest in the future. But I'm wanting to do this in sort of a dollar cost averaging way, where every month I invest a certain amount into the new funds that I want to be invested in. Because of this, I have a whole bunch of cash left over, but instead of putting that in a savings account or just letting it sit as cash in Charles Schwab, both of which pay almost nothing, I have it all invested into this money market fund, which, as you saw earlier, is returning around 5% per year. That's a lot of money to be making for cash that has very low risk. Now, the reason that I mentioned that having this in a Roth IRA could be a good idea is the fact that income earned from things like money market funds are taxed as completely regular income, meaning that this could be up to 37% depending on your tax bracket. Now, for many of us, this would obviously be lower than that 37%, but when we go ahead and put it in a Roth IRA, it's taxed at 0% because we know that that account is tax exempt. This then completes the benefit that I talked about earlier with the fact that it inherently makes that cash completely available to you at any time that you need it, because you can withdraw it, you can sell the fund and withdraw the money without having to worry about any taxes at all, including potential short-term capital gains tax. If you're wondering what exactly is in this fund, that's a good question, and I will show you in just a minute. Another couple important things to keep in mind is that the expense ratio on this is actually pretty high at 0.34%. That's why when we were looking at the number earlier that was over 5%, I said that that's not quite what it actually returns, and that's because of this expense ratio. Also, this fund comes in at just $1 a piece, and there is absolutely no minimum, meaning if you just want to give it a try, or if you're a younger investor, this could be a great option for you. There's also a prime money market fund with Schwab, and I'm sure with other investment corporations as well. But for example, the Schwab one has a $1 million minimum, meaning that might be a little bit less accessible to more average people like myself. I've been unable to find a page showing exactly what it owns in a more succinct version, so I'll go ahead and scroll through this slowly, sort of while I talk, and you can have a pause if you want to have a better look at what exactly is involved in this fund. But again, the goal of it is to provide us with a higher sort of interest rate. It's not exactly like investing in normal stocks. Rather, it's meant to be a lower risk, lower reward investment that makes your cash more accessible while also making it do work for you. Now, if you got ahead and enjoyed this video, make sure to leave a like down below to show your appreciation. Subscribe so you don't miss any more videos like this one. And if you have any questions or comments, make sure to put them down in the comment section down below, and we'll get back to you as soon as we can. But other than that, we'll see you in the next one.